Liftport Group. With me today is a terrific team. I'm super excited about today's episode. So we've been doing these shows now for a little over 3 months, twice a week at our YouTube channel, youtube.com/liftport. We started out as a NASA Institute for Advanced Concepts research team back in 2001, 2, and 3. The company was created in 2003, 4, 5, 6, and 7 to work on the space elevator, Earth's space elevator. We closed down in 2007 and 8 as a result of the economic crisis. And fast forward to 2017, we resurrected ourselves to focus on the lunar elevator. That's been our focus for the last several years. We were mostly quiet during those 2017, 18, 19. And then the pandemic hit. And because of this global plague, we wound up doing a pivot to do online conferences, virtual conferences. And now we're pivoting again in order to keep this podcast series going. We've got a podcast and we've got a conference series coming up. And so you'll be able to find all that stuff at our sites here. We run this show to focus on the intersection of space plus money, plus commercialization, plus infrastructure and policy, which is a lot. There's a lot in there, right? But that's the stew. Those are the ingredients of the stew to go back and forth to space, to move humanity off-world in a significant way. All of those things mixed together. And what we've been doing is we usually have a guest. We usually have a special guest. We just had Sean Mahoney on Monday. We're going to have Sean again probably next week. We've got Dr. Stephen Cohen coming in from Montreal. Peter Gerritsen coming in from Washington, D.C. to join us. And all of these people, everybody that joins us, they all have this kind of intersection in mind, right? They're talking about policy or infrastructure or, it's the business and operations of space. So we want you to join us. Come back. We're doing this twice a week, Mondays and Wednesdays. We're also working with the Mars Society once a month to host their Red Planet Live. We have some other organizations that we're going to bring online to our network. So join us. It's going to be kind of exciting. So pretty excited about our near future for the better futures for all of us. Tonight we're doing something a little bit different, but we're going to do this quarterly because this report comes out quarterly. I don't want to dig too deep into the preamble here. I'm just going to start off, and we'll be introducing Leah Malmos, Taylor Burns, and Rachel Brooks as they analyze this document. So without any ado whatsoever, I'm going to move on. Just give me a moment to share the screen. That's the wrong document. Hold on. Okay, so to start off, it started out as Space Angels a whole long time ago. But now the company is called Space Capital, and they've been around. I'm sure they were around in 2007 and 8. I think that's the first time I ever encountered them. But as Space Angels when they were first getting started. And it was just a small group of what they sound like, angel investors putting in $25,000, $50,000, sometimes $100,000 into these potential startups. Now, candidly, most of those companies from back in those days you've never heard of, or if you did, they were just a blip on the radar, and those companies failed. And there's a graveyard full of early investor money that's just gone. But Space Angels and now Space Capital have been monitoring this field for a decade and a half. And now every quarter they put out a new document, the Space Investment Quarterly, to evaluate what's been happening. And I look forward to this document every quarter when it comes out. And one of the reasons that we're going to be hosting the Dare Greatly conference series is because there are several reports that come out quarterly that are going to be part of that series. I want to read off their own words here. This report is a private market equity investment activity and startup trends in the space economy from the investors at the forefront. And that is really a true sentence. So hats off to these folks. They've been doing some really hard work for a long time. Over the course of almost the last 10 years, 9 years since 2013, just over $250 billion, $272 billion have been invested as private money into the space sector. Now, I'm going to share an anecdote. I was meeting with the chief scientist of U.S. Space Force about 5 years ago, and I then shared with him those current numbers. I forget what they were, but they were about $3 billion. And funny enough, Dr. Mosier didn't believe me, and I actually had to pull this document up as a reference point to show him just how many companies, almost 1,800 now, and he was pretty surprised because, again, this is 2017, 18, 19, and 20. Before Space Force was created. These numbers were larger than the budgets of Air Force Space Command, portions of Air Force Space Command. So it was shocking to him to know that there was this much money going into the sector. So hats off to Space Capital and their team for managing and monitoring all of these numbers, because they're super important to all of us. We're going to bounce back and forth between what happened this quarter and compare it to the whole nearly decade of investment prior. So this quarter, only 85 investments, only 85 rounds, companies getting invested in, pardon me, and not quite $5 billion, which $5 billion is kind of giant, because this whole sector wasn't getting that kind of money over most of this time. So hats off to the folks that are putting their hat in the ring and actually putting cash into their belief system. So let's take a look at this. We're going to look at a lot of these graphs here. The stuff to kind of pay attention to is that this is a market that's growing. It's growing pretty quickly. And it's growing in different parts of the world. You're going to see this broken down several times in different ways. I'm not trying to make this an Amerocentric statement, but the United States is not, nobody's going to be surprised that the United States is primarily leading this. And I don't think anybody's going to be surprised that China's not very far behind. What I do find surprising is that countries like Canada and Indonesia were not on my own radar. Canada, of course, but Indonesia surprised me, right? And that's going to be, there are a couple surprises in this document. So um, you're going to see kind of how people are spending their cash and where different places are spending their cash. And then this other piece we're going to talk about a lot further, but the industry is basically kind of broken into two giant segments: launch and satellites. And then there's this little sliver of emerging industries. We're going to talk about that stuff in more detail, but let's just kind of put that in perspective. Launch is the thing that gets all of the attention, but it's satellites that are doing all of the work. They're the ones that are getting the investment, and they're the ones that are doing a lot of the returns on that investment. So we'll dig into this in more depth here in a minute. But I want to point out that you can see the kind of big bumps and then drop, and then big bumps and drop again in 2018 to 2020 to 2022. That doesn't surprise anybody who's just watching the newspapers, although 2021 did surprise folks for just how much money, how many deals were made in 2021. And that's kind of a surprise. But one thing I want to point out is the early days in this timeline. Google Maps, the iPhone came out with a GPS that revolutionized a lot of the GPS sector, and then SpaceX made their first commercial launch. What's kind of an unknown, untold story was those days in 2004, 5, 6, and 7. There were investments being made. Most of them failed in the sector, but it wasn't really a fully blown, developed sector. It was just in the beginning, the earliest beginning stages. But SpaceX and Google Maps and iPhone, they all had to happen before there could be a commercial space sector, right? There had to be some stuff that we stumbled in the dark on before you could start to develop that. And that's why Space Capital, then Space Angels, start tracking this stuff. Look at 2013. That was a pretty small amount of capital, pretty small amount of deals. That was the earliest days, really. And I want to point out 2014 because Uber is a part of this story as well, right? The world that we live in is very dependent upon satellites and communications. Uber, Lyft, we're going to talk about Grindr and GetAround, all of those organizations, all of those companies, your Amazon delivery, your ATM card working or not working, all of that factors into this story. So this is a big part of the economy. $20 billion invested this year alone, 420 rounds. I find that kind of amazing, kind of astounding. But if you break that down, it's only 2/3 of these deals are either seed or Series A. So very, very small companies at their earliest possible stages to invest. But the bulk of the money, 14 billion of 20 billion, all went into late stage capital. Really what this is saying is people are making a lot of different bets. It's a very diversified portfolio in the range of things to invest in. But the real money is once you've gotten established, Series A, Series B, Series C, the real capital is going into well-proven business models, well-proven teams that are executing on their plan. Earliest stage stuff is really struggling. I see that with our own team. I see that with all of my friends. So that's not going to change. 85 rounds in this quarter. I don't think anybody's going to be surprised, especially with some of the advisories coming out of Y Combinator and some of the other big investment houses. They said point blank, save your cash. You're not going to get any new cash. Extend your runway, cut people if you have to, because we're going into some pretty brutal days. And this is shown pretty clearly by this chart. The end of the second half of 2022 was pretty bleak from an investment perspective. And with that, I'm going to start to turn it over to Leah. These are the areas that we're going to be focusing on: infrastructure, emerging industries, distribution, and applications. All of them are part of this larger story. So I want to encourage you to always keep in mind 20 billion this year, 270 billion over the last 9 years. This is an industry that is just beginning to grow. I think that's exciting. I think it's pretty exciting to see this happen. And with that, I'm going to turn this over to Leah Malmos. Take it away, Leah.
Okay, so my section that I'm going to kind of dive into is infrastructure, and Space Capital has defined it as hardware and software to build, launch, and operate space-based assets. I think an easier way to kind of look at that is launch services, satellite, and then your emerging industries like lunar, space station, and logistics. With that, next slide. Oh, you put that one there. Okay. This is the total equity investment. So this is since they started tracking for the past 10 years is 54 billion. And the good thing to notice about this is that it's 54 billion of 272 billion inside of the entire space sector. That's around 20%. So 20% of the capital in the space industry has been dedicated to launch. And that's really important because, you know, you got to launch to get to space. I mean, it's kind of obvious, but okay. So next slide, please. So we have two different charts here. The first one is the annual investment source, and it kind of shows you the actual capital outlay for the year. And you can see it's down 58%, and that's not good. It's back to 2019 levels. I think this is really reflecting the overall economic environment that we're in right now. It's very recessionary. And the other thing to highlight here is that it's mostly venture capital at like over 75%. And venture capital isn't as a big a risk taker as an angel and individual round. So that should tell you there's been a little bit of flight to safety there. I would expect this to continue for the next 18 to 24 months until we see something different changing in the economy that would let people think that this is a safe place to go. So that there's a little bit of a theme tonight that it's a recession has kind of been affecting the space funding. So moving on to the investment geography, you can see here that it's 66% the United States. One important thing to note there, 32% of that is SpaceX, and 34% of the whole 10 years is SpaceX. So 32% this year and 34% over the 10 years. So they make up a lot of the entire capital outlay inside of launch and infrastructure. Another thing I'd like to point out is that SpaceX did 2 raises in the past year, in June for 1.6 billion, and then they quickly followed on in July with another 400 million. So that is a huge portion of this year's capital outlay. Okay, so next slide. This slide is about the cumulative investment amount by sector. And if you look here, you can see it's dominated by launch and satellites, with launch edging out satellites just a tiny, tiny bit. This is important because you see that emerging industries are barely being funded at this point. I would expect in the next 5 years a huge shift here as you see commercial space stations go up in orbit, as you see Artemis progress and maybe people have lunar startups. So I think this is temporary. You're going to see this change, although satellites are going to continue to 4x, 5x over the next 5 years. So I think that's all I have for this slide. So next slide. This slide is interesting because it talks about how many rounds. So this is how many rounds of raisings. So if you look here, you see that satellites outpace everything with 784 rounds compared to launch. But the last thing I showed you, launch is more money. So that can tell you a couple things. Either satellites have went out of business a lot over the last 10 years, or there's just a ton more satellite companies and they're doing smaller raises. So it has to be one or the other. The other few things I'd like to point out on this slide is that it's kind of a little bit of a side story, is that there were 411 rounds, like 25% for manufacturing. So 25% of funding is going to the supply chain. This isn't the actual launch companies, but actually the supply chain. So that's an important thing to realize. SpaceX is I think they're pretty self-manufacturing. I don't know if they use a lot of suppliers. That's one of their things that they are kind of proud of. But other companies use Lockheed Martin and other kind of suppliers. So that, I think that will probably continue the same because most people aren't going to want to build every part of it. And then I also want to point out that lunar is a tiny, tiny portion with 71 rounds. Next slide. Okay, so this is another chart that's going over the past decade. And if you look at this, you can see the investment amounts is a tiny bit for seed and huge for late stage. And that should tell you a couple of things, that late stage rounds are generally larger asks. Late stage is before you IPO. It's really when a company is trying to pump up their valuation. So they will ask for a lot more money at that time. And then you compare, contrast that to the right pie chart. And the right pie chart will show you that most rounds are actually seed capital. And that should tell you that there's a lot of seed rounds, but those companies aren't getting to the late stage also. So you can also infer a little bit that companies go out of business before they get there. So I think that's interesting. It could be a little scary if you're a startup. But yeah, that's a good one, definitely, if you are an investor, because you might rather go in the late stage. So next slide. Okay. I think this one's my favorite one. I'll probably talk a little too long on this one. And these are the best deals that happened in the last quarter. And I think actually these are from the past. It says top deals in the quarter, but some of these I know have to be in the past year. So the first four are satellite companies. Global Star had a corporate round from Apple, and at their iPhone launch in October, they announced 911 service, and that was going to be provided by Global Star. So that 450 million is from Apple. ASTS Space Mobile is Blue Walker 3. So if you're an astronomer, you probably know this company and despise them because they have the biggest satellite in the sky, and you probably are very irritated by that. This one I wanted to highlight because this is actually one of the few on the list that's public. So this company is already public. They did PIPE financing, which is where they go to private equity and they say, hey, you can get these shares for super cheap and then turn them out on the market. And that's, it does dilute the shares, but it's definitely something to highlight. You could see that again in the future, maybe, but shareholders really don't like that. That's actually pretty negative. Let's see. Axiom Space and Sierra Space are both space stations. I think those are kind of more emerging industries, so Michael might cover that in his section. But I also wanted to point out that Sierra Space did a Series F round, which anything beyond C is considered kind of a down round. So I did look up stuff on Sierra Space and found out in 2021 that they had planned to go public and IPO this year. So I would guess that this raise was to give them more runway to postpone an IPO. I would expect this IPO probably wouldn't even come out till 2025 until the economic conditions are better. I would definitely don't think we'll be hearing about that. But Sierra Space is worth $4.5 billion as a valuation. This is going to be a highly watched IPO. It's probably going to be really exciting. It's going to get a lot of buzz. And just for comparison, SpaceX valuation is $137 billion. So it's not close, but it shows you Sierra Space is doing a lot actually. And they have the Dream Chaser, Orbital Reef Space Station. They've partnered with Blue Origin, and they're a really interesting company to watch. Expect a lot from them in the next 3 to 5 years. Let's see. The other interesting thing here that I thought was interesting was we were wondering what Moonspike was, and I went and researched this company, and it doesn't appear to be a company that's around. The only thing I could find on them was from 2015. And yeah, so it's kind of interesting. It was a crowdfunding experiment, I'd say, to put pet photos and your photos on a rocket and crash land it into the side of a moon. And I'm like, that can't be getting a Series C funding. I looked a little more, and I found out there's a serial space entrepreneur that changed the name to Orbex in 2018, and then now changed it to Orbital Express Launch. And I don't know for sure. I will definitely issue a retraction, but I think these two listings, Moonspike and Orbital Express Launch, are the same thing. But the interesting story here is Orbital Express Launch is doing a biofuel 2-stage rocket, which I've never even heard of this, and I think it's really interesting. It's in Scotland. The National Bank of Scotland actually led the raise for the Series C. And they have a grant from the UK, and they have a spaceport in Scotland they're going to launch from either Q1 or Q2 of this year. So watch for that. And I think that's all I'm going to say on this slide. So let's do next slide. Oh, okay. This is the exits by sector. So if you're an investor, this is the top slide for you. This is the slide you care the most about. And for the past year, unfortunately, there's been a 50% decline in exits. So it's a little, there's been less IPOs. I can only think of maybe like one thing that SPACed last year. Yeah, I think Terra and Orbital. So you had that. So I think with the exits, they're probably going to remain flat for the next 2 years, maybe a small uptick if there's mergers and acquisitions and launch, because that's very oversaturated. So look to see that sector kind of consolidate. And oh, this is a negative stat I also added. 67% of companies failed to even get an exit. So that's not good, actually. But I think, the economy, hopefully it turns a little better. I think if I was an early stage company, I'd be a little worried. But hopefully not. So my major takeaway after going through what, is a lot of kind of some negative financial stuff is the infrastructure sector is going to have cloudy weather ahead for startups looking for funding. Some major winners in this category might be underwriters for M&A, and you're going to have a lot closer microscope on company valuations and less IPOs. And you need to have a strong product roadmap, a proven strategy, and you probably will still get funding because venture capitalists, they didn't seem to decrease any. So they'll still be on the lookout. And with that, if anybody has any questions or comments, I can answer them.
Cool. Thank you, Leah. I'm waiting for the siren to finish going past the office building. So we saw in Leah's presentation a minute ago that the section of emerging industries was at the noise level, right? This is her chart. Um, uh, these emerging industries are still counted within this larger infrastructure section, but for reasons I'll share in a moment, they have gotten their own section. I think that's kind of interesting because they are emerging. It's $3 billion, and you know what? That's cool, but that's 0.012 of 272,300,000,000, right? So while it's a useful part of the infrastructure package, it's in the noise level of the overall funding that space in general has gotten. So 0.01%. I literally started laughing when I saw that. From that, though, just looking at this one small section, this $3 billion, a bunch of things kind of pop out all at once. You know, a lot of the same things that we've seen before. In terms of like how people are investing, venture is a big part of it, and angels are a big part of it. Let's look at 2013 to 2020, basically flat by comparison, right? Basically flat by comparison. But in the last 2 years, 2021 and 2022, more than $2 billion, just about, sorry, not quite $2 billion have moved into this sector. So all of a sudden, it's giving hope to companies like ours and Liftport and our focus on the moon. It's giving hope to big ideas in space. There's a brand new asteroid mining company that's coming online, and I know a lot of people lost a lot of money during, with Planetary Resources and Deep Space Industries. I think at one point there were 6 asteroid mining companies, and yet a new one. We're not here to kind of promote anybody, but there's a new one that just got funded and went through Y Combinator. So that Y Combinator checkbox is a pretty important validator. So 2021, 2022, suddenly it is showing that there is real money in there for the big ideas, moving away from launch, moving away from satellites. It's very small money. I mean, by comparison, you'll see in a little bit, it's dwarfed by some of the other sectors. But that it is starting to happen at all is kind of surprising. And to me, it's exciting. It's one of the reasons why we're running this program in the first place. And we, think about us at Better Futures, our brand, our media brand, Better Futures, and the company of Liftport that wants to build an elevator on the moon. We need to understand these numbers. We need to know our investors are going to listen. We're not raising. I have to make this disclaimer. None of this is investment advice. It shouldn't be taken as any sort of technical analysis for your portfolio. And we, Liftport, are not raising money right now. So I want to be very clear about that. But we want to understand these environments because this is where we live. This is where Liftport lives. I don't think, again, anybody who is paying attention to this space sector nobody's going to be surprised that the United States has 77% of the investment geography. What you might be surprised at is that Finland, Italy, and Canada have 1% respectively. I was surprised by that. So far as I know, I can't think of any Finnish company that is a space anything organization. So I'm going to have to look that up, right? And that's what I wanted to say earlier is that, these reports help pull away blinders, right? We have all these assumptions And I would not have guessed that Japan was as big a force in here. They're going strong after the debris mitigation sector, and there's some guesswork. I won't say it's knowledge, but there's some guesswork that maybe they're looking at the bigger idea of asteroid mining and resource extraction by orbital, by collecting orbital debris. So interesting stuff here. I'm going to actually read from the report here. It's the only time I'm going to do this, so just bear with me. The relatively even distribution of capital across each stage reflects the infancy of these industries. Despite the positive signal, the inconsistent funding patterns make it unclear whether sufficient growth capital exists in the tighter capital markets to scale companies in the near term. So I think that's a really important line, and of the whole 16-page report, that's the only section I'm going to read. But I want you to understand that this stuff is new, it is risky, but there is maybe some hope on the future if you consider how these graphs are laying out. So how are organizations spending their money? I believe everybody knows that space stations are sure getting a lot of attention these days. That's been pretty important. They actually started getting funding a few years ago, so some of them are pretty far along. On a show that we ran at the beginning of last year, maybe it was February or March, we had a whole set of shows focused on space stations, and we were tracking 14 stations, 3 government ones, but the rest were all private. We put some odds on them. Some of them were pretty long odds. Some of them were very viable. I mean, there are a couple space station organizations that have $500 million in contracts, and many hundred millions in the checking accounts. So no surprise on stations. I am a little surprised in lunar development and industrials. I didn't think there was that much money in the lunar sector, but I have been wrong, and I'm kind of happy about that. And this brings it a little bit deeper of just how many rounds there have been and where that money is going. I want to point out 3 things on this chart. Space situational awareness. If you're a civilian, you use the phrase SSA. If you are a defense contractor or part of Space Force, you use the phrase SDA, Space Domain Awareness. And believe it or not, that distinction matters. It matters when you're writing proposals, and it matters how the technology is deployed. I suspect you're going to start seeing a whole lot more investment in that sector because Space Force is very keen to understand what's out there. And knowing that France, the UK, Australia have all dedicated space forces, similar but not the same as America's Space Force, and that other nations are considering developing space forces. SSA, SDA is going to be a pretty big deal. What's unusual, and Rachel's going to talk about more in a moment, is that this stuff is not usually done in the private sector. So watch that. I think that's going to be interesting. Construction, I think, is interesting. Habitats we just talked about is interesting. On-orbit servicing. I've got a whole set of videos and papers about kind of the architecture of the future, what I call the grand architecture that kind of lays out what I think is going to happen between now and 2025. And certainly orbital servicing is a key component of that. So I'm excited to see where this goes. This chart is different from any of the other charts. It's all basically the same levels. Seed and Series A, B, C are all the same as late stage and other. This is the only of the whole report. This is the only one like that. So There are not a lot of late stage organizations in this sector. I genuinely cannot think of who they're talking about because I don't count any of them as late stage, but I think that's interesting. And again, there's a giant bias. 82% of the money is going into seed and Series A, but that's only $1 billion going into seed and Series A. So of the $3 billion total, only a small fraction of it is going into startups. But most of the deals are startups. So that means the startup deal itself is very small. And again, going back just 2 slides, all of that has happened in the last 24 months. I had to look up many of these companies because I was genuinely unaware of them. And I don't have the same, the ones I did look up, for example, Dracula Technologies, they're a battery company. They're an energy company. I would not have put them in a space company unless Space Capital knows more about them than I do. True Anomaly, absolutely a space company. They're doing space domain awareness. They're all former military officers. That one's great. Not great, but I mean, it's really interesting, and I think it completely fits this sector. Slingshot. I have my personal opinions on the viability of Slingshot as a technical effort, but I love the idea of using non or limited rocketry to get to space. That goes back to my space elevator days. It's interesting because this Slingshot is noted on this chart and also in the larger infrastructure chart. In the infrastructure chart, $40 million is at the bottom of their list. And in the emerging markets area, it's near the top of the list. So I think that's pretty interesting. Editorial note, I am pretty sure that the folks at Space Capital have an investment interest in Zero G. They did not call that out. I don't know that they had to call that out. I just think it's something that I'm personally aware of. But Zero G, they're the folks that operate the Vomit Comet, and they wanted to buy another plane so they could do more Vomit Comet runs. So I think that's pretty exciting. Gravitics is a company that is kind of taking up where Bigelow Aerospace left off. Design is very similar. It's a space station with a pretty similar footprint, design, and style. I actually had to look to see if there were any Bigelow Aerospace people on the team. It doesn't look like there are, but it's a little bit hard to tell. But that's a space station company. Axiom is a space station company. So you're going to see more of that. No exits. I don't think that's going to surprise anybody. There were 4 out of the whole year. I believe that those were acquisitions. I don't think any of them went public. Nothing that I can think of. And with that, we're going to turn it over to Rachel to talk about distribution.
Thank you, Michael. I'm going to keep mine a little bit briefer because we are running nearer to the end of the program now. But my section really ties into what Michael has just discussed, as well as what Leah mentioned, especially when she referred to cumulative geography of infrastructure. I'm taking this report from my background. I have a background in defense analysis journalism. I'm looking at this as a whole report, not literally the particulars. Space tech that applies to distribution and navigation technology is a close cousin of infrastructure because navigational technology powers the telecoms of infrastructure. And really, when we're looking at development and distribution in space, we're looking at a whole of nation effort to commercialize geoeconomic supply chains and defense structures of computer systems in space. So, Michael, if you would move to the next slide, please. We're seeing in this slide that the investments here are relatively small in comparison to the full amount of investments we're looking at. I attribute this to the fact that this sector is dominated by governments. So it doesn't really surprise me very much that this number is actually quite small in comparison to other private sector investments. With that, let's move to the next slide. Okay, here we're looking at, one moment. So here we're looking at the annual investment sources. We're noticing a lot of otherness in these charts. We're noticing that venture capital, while this document talks about big tech becoming an important player in this, we're not really seeing a lot of that reflected in this chart. So I have to wonder what otherness here means. I attribute that again to what I mentioned before, that this sector is dominated by government. So I assume that this, not really having a traditional financial analysis background, I attribute this to government acquisitions and things of that nature. So let's move to the next slide, please. Here, this doesn't really surprise anyone that the U.S. leads this, because the U.S. still is like a major player in this sector. I will say that we need to point out here China, while its numbers in this particular chart look a lot smaller than the United States, this is a document referring to like business companies, and China, there's a lot of bleed between the state-owned entities and the public-owned entities. So I wanted to clarify here that this number may not tell us the full picture of investment here. When we look at these other things, I found it interesting that a lot of the story of geoeconomics and geopolitics in today's environment are really reflected in this chart. We've noticed that countries that are allies of the United States agenda and world politics are really investing a lot more money on a public level than previous, especially when we look at the fact that their space programs are so much smaller or so much younger than some of these other more established ones. So this, I think we see the story behind the numbers reflected here in this report. With that, I'd like to move to the next slide. Nothing really surprising to be found in these statistics. We see GPS is really leading here. I feel that that's probably, from my instinctual background, the fact that GPS is an older sector. GPS systems have been used in one way or another for a very long time, especially like, obviously my knowledge is in the Defense Center, but I don't really think that these numbers are very surprising, so I'm not going to spend a very long time on this if we would like to continue. One moment, my slides are out of alignment. All right. Here, this I find very interesting, that while seed to the left of your chart is beneath 1 billion, it makes up a very large portion of the pie chart on the right, which kind of indicates to us that a lot of small money is going into these cumulative round shares, that seed funding has taken up a very large portion of this. And do with that what you will, but I find that to be a pretty interesting statistic here. Let's move along, please. Now, these I had to do a little bit of background into because I wasn't sure exactly what they did. Nearmap, Project 44, and so on. I liken them, to the best of my understanding, to B2B software as service entities for space navigation. I wondered when I was looking at this what Nearmap had that these other companies didn't, because if you look at the slide, you'll notice that Nearmap grossed $704 million in its take private round. This I attribute to the fact that Nearmap was invested in by what Barron's Investor magazine referred to as tech's last bullish investor. I believe I'm pronouncing his name correctly, Thoma Bravo. So I have a feeling that's probably why, out of all these companies, because the others have relatively similar, especially the last three funding rounds. So I feel that that's probably an investor-related figure there. If we could move on to the next slide. Okay. Here we'll see that trends in exits by sector appear to have spiked as far as satellite communications, which is what SATCOM refers to. are concerned as of the last 3 years. We noticed that there's seems to be an uptick between 2019 and 2020. I don't really have enough background information on this to understand what might be the case, but I instinctually believe that's probably due to geopolitics, because there was a lot of world relationships that satellite communications influence that during the latter half of the Trump administration, beginning of the Biden administration, as far as U.S. politics are concerned, really emerged to the front of political narrative. So I'm not really overly familiar with the exits here, but I would feel that that is probably what we're looking at. Now, we're running nearer to the end of our program, so if there are any questions, perhaps we would withhold them to the end, and I would like to pass to my teammate Taylor to take it away.
Thank you so much, Rachel. I appreciate that. And yes, I'll do my best to respect time, but I'm covering the section on applications, and it's been defined in this document as specialized hardware and software that utilizes data from space-based assets. Can we advance the slide, please? So we see here that total equity invested in the last decade has been $208.4 billion. I crunched the numbers, and that was about 75% investment in applications, which makes sense, or it's logical. It's a fair analysis. And so if we advance to the next slide, we see that in 2018 we had the highest spike in rounds as well as in venture capital, but it's also comparable to venture capital in 2016. So we see that also the data trends downward on the bar chart on the left-hand side. During the pandemic, number of rounds and also capital across all different types of investment sources decreased, which is reasonable. It was a time of retraction, if you will. The pie chart on the right-hand side shows USA leading at 41% of cumulative investment, with China nearly or just 6 percentage points behind. So there's not it's not a very significant lead in investment based on geography. And if we look at those 1%, those tiny slivers on the right-hand side, we see that Colombia and Estonia made blips on the map. That's rather interesting. I think that that's fairly unexpected. In our behind-the-scenes commentary, we were talking about how we didn't really anticipate or expect those countries like Canada, Colombia, and Estonia, India, like what's really going on? I guess we can take a further look at what's happening at these geographic areas to better understand what's happening there. Let's advance the slide one more time, please. Okay, so on the left-hand side, we see that GPS has a very strong, it's actually dwarfing the investments cumulatively against SATCOM and GeoINT. And of course, as mentioned previously, satellite communications is SATCOM, and GeoINT, I learned, is geographical intelligence. And I believe I have the definition somewhere not too far, but effectively, by definition, it's geographic intelligence refers to products arising from the collection, processing, analysis, evaluation, and interpretation of geographical information, concepts, and theories about foreign or domestic entities of geographical areas. It's a mouthful, but when you think about the terms of those two words, GeoINT, it's somewhat intuitive, and then it's somewhat not. So maybe we'll talk about that in the Discord chat. I see Mr. Nguyen has been very active, and Mr. Plata are two of our very supportive followers. So thank you guys. We acknowledge you. We appreciate the content response, and feel free to drop some more questions in the chat. And we'll do as soon as we can. So let me continue on. The hand side shows a whopping 75% contribution from GPS has been repeated in this show. Geographic intelligence is about 24%, and satellite communications applications, again, this is the application section, is a mere 2%. So it's interesting to see how value and assets and liabilities are being redistributed, various financial resources, I guess you could say. Next slide, please. Okay, left-hand side, again, we have a dramatic, significant investment in the late stages of nearly or of almost, I guess about almost 200, it's approaching $200 billion on this graph. The numbers we just passed them not too long ago, but we see that the main thing here, late stage investment, again, dwarfs seed, Series A, Series B, Series C. All these other types of investments are being significantly dwarfed. And so, I'm sorry. And so on the right-hand side, we see that, again, seed, cumulatively, the seed investment is nearly 50%, but that's by share. When looking at investment amount, late stage is what's leading the force, leading the, I guess you could say, the space race, which is can be a dramatic term, or it can be appealing to some and not as appealing to others, but you could almost say that there's an East versus West space race happening. Maybe we'll talk about that more in the chat, guys, in the Discord chat. Next slide, please. Okay, top deals in the quarter. Wow, we have Anduril at a whopping nearly $1.5 billion investment, and it's in round Series E. So I did look into what Leah mentioned earlier, and Series E is considered a later round of investment, and Series E can be negative or can be beneficial, but it's all about perspective. It's all about, because most companies actually don't make it to Series E. So if you make it to Series C, there's a very specific reason why, I would argue at least. And Anduril, I learned in my research, is a company that, where are my notes? They're not too far, everyone, bear with me. Here it is. Anduril, for those that don't know, is an artificial intelligence powered open operating system that brings autonomy to defense's toughest missions. Now that's a mouthful, but that sounds like they're doing pretty good or important work, depending on who you're as. And so the second leader, or I guess the second in place as far as top deals in the quarter of 2022, is Shield AI at $225 million. So if this was on a bar graph, there would be a very significant, I argue, significant difference between the first place and second place deals in the quarter. And look who else appears on the chart. Grindr. Yes, it is that app. I'm sorry to tell you. But yeah, Grindr had $100 million investment in applications. Again, that's the hardware and the software for GPS-based information logistics, however you want to say it. And I want to get off stage quickly here so we can kind of respect time. And let's notice this, the last sentence on the paragraph, I'm sorry, on the right-hand side, those last two sentences. While companies in category continue to secure large investments, applications operating in defense and logistics account for 50% of the largest deals in 2022. I believe we have one more slide, Michael, if you could advance.
Sorry.
Oh, good. Okay, and finally, we're talking about exits now. Okay, so there's two significant spikes in the number of rounds, one in 2017 and one in 2021. I'm not sure what events occurred in 2017 that caused a spike in the number of rounds, but we see that the GPS communications were actually nearly at the noise level. So that's something worth diving into in another episode perhaps, or again in the Discord channel. And then in 2021, the number of rounds increasing, I believe it was about to 420 or something like that, but $80 billion worth of rounds activity, I guess you can say, makes sense because that's when we were kind of adapting to the latest pandemic. So it makes sense to see more activity in one of the variables that were considered. And then again, or surprisingly, in 2014, satellite communications, $80 billion worth of activity. I think these are numbers that deserve more time and attention, but of course we want to respect everyone's schedule. Thank you so much for our audience, our listeners, and our interactive people here. And let's see, what else did I want to make a note about in exits by sector? Exits, one thing that was very important and that I had a hard time kind of grasping because I don't have a financial background is that an exit is realized gain or loss. So either something that you did want to happen or something you didn't want to happen. Maybe you decided to IPO, maybe you didn't, but exits are a specific realized gain or loss in one's investment. And so with that, I think that I'll turn it back over to Michael now so he can close us out. We appreciate your attention.
Thanks so much, Taylor. And really want to shout out to my team about doing a terrific job with this. This was not easy. This was a bit of an experiment for Doug and Hohen, who have been here kind of since the beginning. We appreciate your comments and questions. We appreciate your support. But shout out to the team who have kind of pulled off a pretty Herculean task. So thanks, folks. I really appreciate it, y'all. We're going to close this off. This is the last slide of the last page of the report. I want to recommend that everybody go and get this report. Space Capital has put a lot of effort into it. I'm going to post some links at the very end of the meeting here, just before I close it off. So just stick around for a second. I'll post links to each of the things. It's 621 exits out of nearly 7,000 rounds. That's a lot of stuff happening. It's pretty exciting to be in this industry. It's fun to be a part of it. Some things I'm going to talk about for their methodology, they only report things that have at least two pieces of confirmation. That's really important because it does two things. One, it tells you that their information is credible for the information that they have. The other thing it guarantees, in my opinion, is that there are going to be underreporting if you don't have reporting through one, or if you're still in stealth mode, unless you're filing Securities and Exchange level filing, or some reporter picks up something. There's a lot of companies in the space community that are very, very small, trying to get something interesting to happen, and they're probably not in this catalog. So I want to give a shout out to Space Capital. They've done a heck of a job. I'm going to post in here, it's going to be one of the last links I post, their interactive portal. It's staggering and mind-boggling. That's the only hype I'm going to give it. But I'm telling you, their interactive portal is a gem of information. It's a goldmine of information. And I really want to encourage you to take a look at that. And with that, sorry, we don't have a whole lot of time. Doug, I'd be happy to chat with you offline about that. We have some interesting questions in the chat. We have some great interaction in online. But we do have to respect everybody's time. And with that, we're 3 minutes over, so I'm going to have to cut it off. Thanks, everybody, for being a part of this. Please take a look at DareGreatly.space, betterfutures.space. We're looking forward to the conference we're holding at the end of March. We're actively trying to get folks from Space Capital to join us and give us their analysis. We've got a bunch of other great guests lining up, so definitely want to be a part of that. And with that, I'm gonna close things down. I'm posting some links very quickly, so stick around for about another 90 seconds. This is the interactive dashboard. Honestly, I could get lost in this thing. It's fascinating. Well worth your time and effort. Here's the quarterly. You can get your own get your own copy. They'll email it to you, or you can download it immediately. And then specifically about Space Capital. So hats off to those folks for keeping the lights on and keeping all this data going. Everybody, appreciate it. Thanks very much. My team, Jen, who's in the background, who did all of our slides. Thanks a lot. Yusuf, who's going to post stuff. Thanks a lot. And Hohen, may the force be with you too, buddy. All right. Thanks. Take care. Bye.